Welcome to the deep dive. You're here because you want to understand this wild ride in the semiconductor industry right now,
Yeah.
especially looking at it through this iShares Semiconductor ETF, SOXX.
Mm-hmm.
You want the insights, quick and deep, but without, getting totally swamped in jargon.
And that's exactly what we're aiming for today. We've been looking at a recent piece from The Motley Fool focused on SOXX.
Right.
And it really flags something pretty striking, the sheer volatility in this sector. I mean, it's enough to make your head spin.
Spin is definitely the word. We saw SOXX jump, a massive 18% one day?
Yeah, on Wednesday.
And that was right after some pretty big drops.
Exactly.
So it really makes you wonder what on earth is driving this.
For sure.
So our mission for this deep dive is pretty clear. Let's unpack what's causing this roller coaster.
Yeah, okay.
Let's get a really solid handle on what SOXX actually holds.
Right.
And figure out why the article suggests that, even with all this turbulence, it might still be a buy.
Especially for that long-term view, thinking about AI and, well, global connectivity.
Exactly. Okay, let's get into it. This recent craziness in semiconductors. What's the story?
Well, as the article lays out pretty clearly, the whole industry is seeing some significant price swings. It's really not a stable picture right now.
And SOXX's performance really highlights that, doesn't it? Can you walk us through those specific moves the article mentioned? Sounds like it was a dramatic few days.
Oh, it was quite a week. So over this recent 5-day period, right, the ETF started okay, up about 2%. Then, things got rocky, down 7.5%.
Ouch.
Followed by another drop, even bigger, 10%.
Wow.
But then came that Wednesday, a 19% surge. A real monster rally, as they called it.
19%.
But here's the kicker, right? Even with that massive jump over the whole 5 days, the ETF actually ended down about 3%.
No way. Down 3% after a 19% rally.
Yep. It just shows how incredibly sensitive things are right now.
So a 19% rally in one day. That's just huge. What causes a swing like that after those big falls?
Well, the article points to a couple of key things, and they're kind of linked. First, tariffs.
Ah, okay. Trade stuff.
Exactly. They're impacting global supply chains, creating uncertainty. I mean, semiconductors rely on this complex international network, right?
Right. Design here, manufacturing there.
Precisely. And tariffs can really mess with that flow. Second, these trade tensions. They also make companies rethink their capital spending.
Which means?
Which directly hits demand for chips. If companies are hesitant to invest in new equipment or data centers, they buy fewer semiconductors.
Gotcha. So that monster rally on Wednesday.
The article suggests it was basically fueled by market optimism, like a hope that maybe trade tensions could ease up.
Ah, so a hope-driven rally.
Pretty much. So a lot of this up and down seems tied to these bigger geopolitical and macroeconomic factors.
So it's not just about how individual chip companies are doing day to day. These huge global issues are casting a shadow. Or, like on Wednesday, maybe a brief ray of sunshine.
That's a good way to put it.
Okay, let's dig into the SOXX ETF itself then. For anyone listening who's maybe a bit newer to ETFs, can you give us the quick, no-nonsense version of what it is?
Sure thing. So think of an exchange-traded fund, an ETF, like a basket.
Okay.
It holds a whole bunch of different stocks, but you buy and sell it as a single thing on the stock exchange, just like you'd buy, say, Apple stock.
Right.
And in this case, the basket is filled with semiconductor company stocks. The big advantage is you get exposure to the whole sector with one purchase.
Instant diversification.
Exactly, without having to buy, dozens of different stocks yourself.
Makes sense. So instead of betting on just NVIDIA or just AMD, SOXX lets you buy a little piece of a lot of them.
Precisely.
And SOXX is a pretty big deal in this space, right? One of the main semiconductor ETFs.
That's right. The article points out it's one of the largest buy net assets, basically, the total value of all the stuff it holds.
So a lot of money is focused on the chip industry through this particular fund.
Yeah, it's a major player.
And it's not just focused on one tiny niche, is it? It gives a fairly broad view.
Absolutely. SOXX is designed for broad-based exposure. It covers chip design companies.
Okay.
The foundries that actually make the chips.
Manufacturers.
Right. The companies making the super specialized equipment needed for manufacturing, and even the software companies involved in design and testing. It really tries to give you a slice of the whole ecosystem.
The whole value chain.
Exactly.
And how many companies are we talking about inside SOXX? Is it just a few big ones, or?
No, the article mentions it holds 30 different companies.
30, okay, so that's decent diversification.
Yeah, that's a key benefit. It helps spread the risk compared to just owning one or two chip stocks. If one company stumbles, the others can cushion the blow, you know?
Right, right. Okay, so this basket has 30 companies. Naturally, the biggest ones will have the most impact.
Sure.
The article flags the top 5. Can we dig into who they are and why they're so important? Let's start with, well, the big one everyone knows, NVIDIA.
Definitely. NVIDIA, as the article notes, is the leader in GPUs, graphics processing units.
Right, for gaming originally, but now.
But now, crucially, for AI. It's fascinating how their gaming tech, focused on parallel processing, turned out to be perfect for artificial intelligence.
Yeah.
These GPUs are absolutely vital for training those large language models and other heavy AI tasks. Their dominance there makes them a cornerstone.
Total sense. AI is everywhere.
Mm.
Okay, who's next? Broadcom. What's their angle?
Broadcom's interesting. They do a couple of key things. They make accelerator chips, ASICs, application-specific integrated circuits.
ASICs. Okay, different from GPUs.
Yeah, they're custom designed for very specific AI jobs. So super efficient for certain tasks, maybe more so than general-purpose GPUs.
Oh, okay.
But Broadcom's not just AI chips. They have a big, growing software business, especially after buying VMware.
Right, I remember that.
And they've got a long-standing, important division-making network connectivity hardware. Essential stuff for, well, everything being connected.
So, more diversified. AI chips, software, and networking hardware.
Exactly. A bit broader than just pure play AI hardware.
Okay, got NVIDIA, the AI leader, and Broadcom. More diversified, but with key AI and connectivity roles. Third is Texas Instruments. They feel like they've been around forever.
They have. TI is a real foundational company, but their focus is different again. Mainly analog and embedded chips.
Analog and embedded. So less about the high-speed processing like NVIDIA.
Yeah, think more about the essential guts inside everyday devices and industrial gear. Sensors, power management chips, microcontrollers.
The stuff that make things work, but maybe isn't the headline grabber.
Precisely. Critical components for industrial uses, automotive, tons of applications. So maybe less flashy than AI chips, but absolutely vital across the economy.
Interesting. Essential, but maybe under the radar sometimes.
Yeah.
Okay, next up, Qualcomm, another familiar name, especially for phones.
Exactly. Qualcomm dominates smartphone chips. Their Snapdragon processors are in a huge number of phones. And as the article highlights, that now includes Samsung's latest Galaxy phones, which have generative AI features built right in, running on Qualcomm chips.
Ah, so bringing AI directly to the phone.
Yep, so their role in mobile, plus this move into on-device AI, makes them a really significant player.
Okay, and rounding out the top 5 is AMD, Advanced Micro Devices. They're usually seen competing with Intel for CPUs, right?
Yeah, that's their traditional battleground, yeah. Central processing units for computers.
But they're also trying to take on NVIDIA and GPUs.
They are. They're pushing hard to get more market share in GPUs for data centers, aiming straight at NVIDIA's stronghold.
How's that going?
Well, the article points out they haven't had substantial success there yet. It really just shows how dominant NVIDIA currently is in that key AI space.
Okay, so those top 5, NVIDIA, Broadcom, TI, Qualcomm, AMD, really show the different facets of the industry, don't they?
Absolutely. From AI powerhouses to mobile giants to the essential analog players.
And together, these 5 make up a pretty big chunk of SOXX, about 38%, the article said.
That's right. So while you get diversification with 30 holdings, these big names naturally drive a lot of the performance.
But still, having 30 companies spreads the bet somewhat.
Definitely. It provides a good level of diversification within the chip world.
Okay, so we get what SOXX is, who's in it. Let's get to the core argument.
Yeah.
Why might it still be a buy, especially as a play on AI and global connectivity?
Right. This is where it gets really interesting. The article makes this case that SOXX is a relatively simple way to invest in AI.
Simple how?
Well, think about the big picture. AI needs massive processing power, right?
Oh, sure.
That means huge demand for advanced chips. And similarly, all our connected devices, cloud computing, data flying everywhere, that all needs more and more sophisticated semiconductors too.
Okay, the demand seems clear.
So the insight here really is that with an ETF like SOXX, you're not trying to pick the one winner in AI chips or connectivity.
Right, you're betting on the whole trend.
Exactly. The article uses this great analogy. NVIDIA and Broadcom are likely to benefit from more data centers being built no matter who wins the cloud war: Microsoft, Google, Amazon.
It's like selling shovels during a gold rush.
Precisely. The rising tide of demand for compute lifts these chip makers.
So even if the market shifts, like maybe AMD does take GPU share from NVIDIA eventually.
Or maybe different AI tasks start favoring Broadcom's ASICs over GPUs.
An ETF like SOXX is positioned to potentially benefit anyway, just from the overall growth in chip demand.
That's the idea. You get exposure to that whole ecosystem growth without needing to make those really specific, maybe risky bets on which company wins which battle. You're investing in the fundamental building blocks.
That makes a lot of sense as a strategy. Now, despite this optimistic long-term view, the article does mention the recent performance wasn't great, right? Even with that big rally.
No, definitely not a smooth ride this year. The article noted that at the time of writing, SOXX was still down about 15% year to date.
15%? Ouch!
And some big holdings were down too. NVIDIA also around 15%, Broadcom down a bit over 20%.
Wow.
It really hammers home that volatility point we talked about earlier.
So, given those recent drops, the advice is basically take a step back, look long-term.
That's crucial. The article specifically says, zoom out, think about a 3 to 5 year time frame at least.
3 to 5 years.
Yeah, especially with semiconductor volatility, that longer view helps you ride out the short-term bumps and hopefully capture those bigger trends like AI and connectivity.
But, 3 to 5 years in tech, especially chips, that feels like forever. Things change so fast. What are the big risks that could mess up even that long-term view?
That's a really fair point. The trends look good, but yeah, there are risks. Those trade tensions could flare up again, disrupting supply chains or hitting demand.
Okay.
There's always the chance of some big technological disruption. Maybe a whole new way of computing emerges that needs fewer silicon chips, though that seems more out there.
Right, more sci-fi for now.
And just, regular economic cycles. A global slowdown hits demand for everything, including electronics, which hits chip demand. So, yeah, potential bumps exist.
Okay, so it's not a guaranteed win, even long-term. If someone's thinking about SOXX, what are the absolute must-knows before jumping in? The article mentioned a few key things.
Yes, definitely some important points. First, and we keep saying it, but volatility.
High volatility.
Super high. This isn't for someone with low risk tolerance or who needs the money next year. You've got to be okay with potentially big swings.
Right. Stomach the dips if you believe in the long game. What else?
Check your own portfolio for overlap. This is really important.
Meaning?
If you already own, say, a bunch of NVIDIA stock individually, then buying SOXX means you're doubling down on NVIDIA, maybe more than you realize or want. So look at SOXX's holdings and see how much overlap there is with what you already own.
Good practical tip. Avoid accidentally over-concentrating. And what about the cost, the expense ratio?
Yeah, SOXX has an expense ratio of 0.35%.
Which means?
For every $100 you invest, 35 cents per year goes to cover the fund's running costs.
Is that high? Low? Average?
The article says it's not the absolute rock-bottom lowest you'll find for an ETF,
Okay.
but it could be seen as a reasonable price for getting that broad, diversified semiconductor exposure in one easy package. It's often a trade-off, cost versus convenience and diversification.
Got it. Okay, so let's wrap this up. We've seen the semiconductor industry and SOXX can be really volatile thanks to global factors like trade.
Big swings.
But SOXX offers a diversified way into these huge long-term trends, AI, connectivity, by holding key players like NVIDIA, Broadcom, and others.
Right, across the whole value chain.
But it absolutely comes with higher risk, needs a longer time frame, higher risk tolerance.
Definitely.
And you got to check for that portfolio overlap.
Couldn't have said it better. The real aha here is seeing how an ETF like SOXX can be this kind of catch-all investment for a super complex sector.
Yeah, instead of trying to pick the single winner.
Right, you're investing in the engine that powers so much tech, especially AI.
And that brings us to a final thought for you listening at home. Semiconductors are foundational, right? Not just for AI, but cars, medicine, energy, everything.
Absolutely everywhere.
So thinking beyond just AI, what other big long-term trends might keep fueling semiconductor growth? And how could a broad ETF like SOXX fit into a bigger strategy focused on just technological progress?
Yeah, that's a great question to ponder.
Definitely something to think about as you navigate your own investment journey. Thanks for taking this deep dive with us today.